2 days ago, I made a video when Bitcoin was trading at $75,000, suggesting that we would see the high of $76,000 get broken in another wave up. And that is pretty much exactly what has happened. Bitcoin hit a high of $78,300-ish, depending on exactly what chart you're looking at. And I talked about the possibility that before a move like that would happen, we would get a bear trap that would break underneath this $73,500 double bottom to tag everyone's stop losses and reverse. And that is exactly what happened as well. Price came down to 73,200, destroyed everyone's stop losses, promptly reversed, and pumped back up to make a new high, the highest price since February. And obviously, when something like that happens, we have to readjust our 50% tool for this range. And upon moving it, you can see it lines up almost perfectly with the 50-day triangular moving average now. Now, before I jump too much into that, I'm gonna share what I think the next move is by coming over to what I've been sharing in the THT Discord. Now, firstly, this thing here. Now, if you remember watching Jason's YouTube videos, he talks about how if the consolidation is not long enough, the move up typically is very short-lived. And that's pretty much what I think is happening right now. Like, we've only consolidated for, about 2 months before we started to break out of this diagonal downtrend line and start moving upwards. On the weekly time frame, my thesis has not changed at all. You can see from the last cycle, we broke out of that trend line, pushed up, didn't quite make it to the 33 fair value band and dumped back down. Now, if I come back over to the Discord, you can see a bit more zoomed in photo, a screenshot I took on my phone. And obviously, this other screenshot was taken when price was at $74,300. Now that price is at $77,000, the weekly candle still hasn't closed. We still haven't touched the 33 fair value band, so my theory is still valid. One thing we can note though is the monthly BX trender is now finally light red. The month still has about 2 weeks to go, but for now, the monthly BX trender is making a higher low. Now, if we go back and have a look at the same period last year through August of 2022, you can see although this month pushed a bit higher like it is now, it closed beneath the open. So if something like that were to play out in the next 2 weeks, Bitcoin would have to fall over 10% and we would have to close underneath $68,300. Now remember, history doesn't have to repeat, it just has to rhyme. So any closes underneath this 50% level of $70,800 or this 50% level of this range at 69,100, which sort of lines up pretty well with the 50-day TMA at 69.6, would probably validate my theory that we still have another leg down to go. And if we do go back and have a little bit more of a detailed look to see what happened when we broke out of that trend line, back in 2022, obviously we had our 5 green weeks on the weekly BX trender. That 6th week pushed only a tiny bit higher. We went from 21,000 to around 21,500. So a $500 move when price was at 20K would probably translate to around a $1,700 move when price is at 70K. And if we do get another $1,700 move from the high of this weekly bar, which is 78.3, that would pretty much take us exactly to $80,000, which would be just beneath that wick back in November last year and would still keep Elliott wave analysis for this bear market in check. So if I draw a 1, 2, 3, 4, 5 pattern, you can see our 1, 2, 3, 4, 5. Now, an interesting thing to note is because of how strong this push, this wave 4 counter trend rally is, we know that Elliott wave analysis, wave 3 cannot be the shortest wave. And wave 3, you can see, is clearly shorter than wave 1. I'm just going to change this to another color. Maybe black? Yeah, so it's a bit easier to read. But you can see, wave 3 cannot be the shortest wave. So that means wave 5 has to be shorter than wave 3. And as a result, that would mean even if price were to come down almost vertically, that would mean the Bitcoin bear market low could not be less than $40,000. And obviously, a straight vertical sell-off is probably unlikely, considering we've already had some pretty vertical sell-offs before. However, I wouldn't entirely rule it out, because in 2022, that's what we saw with the FTX collapse. Like, price looked like it was going to rally, and then we just had this single weekly bar that was, what was that, 21k to 16k, so 21k to 15k, so a 25% weekly down bar. And I wouldn't entirely rule that out. We'd probably need some sort of crazy news out of the Middle East to get something like that. But if we were to get a 25% down bar in a week, that would only take us down to around $58,000. So we would actually need to see a 48% down week. And I'm pretty sure the only instances we've seen something like that happen was COVID. So, and also, that is assuming that $40,000 is the bear market low. So if price only comes down to, 48,000 or 53,000, etc., which, if you remember my last video where I talked about the -1 standard deviation band not being tapped again on the weekly and us not breaking back underneath this downtrend line. So in order for this 5-wave structure to still be valid, if I do a straight copy and paste and I rotate this line like this, potentially this would mean that the low for this price target for this cycle would likely be closer to the low $50,000 range rather than the $30,000 to $40,000 range, like some people have been talking about. Obviously, we'll have to see how this -1 standard deviation band actually moves, as well as if we do manage to break structure. I think if we do manage to push, into the mid $80,000 or $90,000 range or whatever, like some people have been talking about, then potentially we could actually set up for a higher low where price comes back down to maybe retest, $65,000 or $70,000 rather than making a lower low. Now, that's obviously a wild card theory. I'm still of the belief that history doesn't have to repeat exactly, but it just has to rhyme. And I don't think we have seen enough consolidation for Bitcoin to start taking off into the $100,000 range, $200,000 range, or whatever. The other part of my thesis still stands. The USDT dominance is still on track for a balanced correction after a bullish entry signal. And we all know USDT dominance up, Bitcoin and crypto is down. And typically, when we get an entry signal flashing on the weekly on the THT combined signal indicator, price pulls back around 15%, 15.74%. And if I draw it like that, that comes down to about 6.7%. We've tapped, 7.1%. So potentially we have a little bit more to go, but obviously that is just an average correction. We all know, based on, if we just look at the take profit, like your expected return per trade on your re-entry is, where is it? 17%. But in this case, the last move was 31%, and the move before that was 14%. So maybe we only get a 11% drawdown this time on our re-entry, which I think is probably more likely, because otherwise, if Bitcoin pushes higher, it would higher than about 80,000, like I showed previously, we would probably be in a camp of this time is different. Now, speaking of this time is different, have a look at this upper trend line connecting the previous swing highs of this consolidation range to the 17th March, 4th of March, 15th of February. If we look at the 28th of November, 3rd of December, 9th of December, you can see this final push up did not quite manage to reach that trend line, that upper trend line, and obviously didn't come to that horizontal trend line either. Now, that horizontal line is obviously this $80,600 line that I've been talking about, which for some reason I haven't drawn on my chart. So if we were to see a balanced correction where history doesn't repeat exactly, but it rhymes pretty well, we could see a push up to pretty much $80,000 exactly. And I do believe something like that is going to happen based off of this analysis right here. And you can clearly see on my 4-hour chart, I've got a 1, 2, 3, 4, 5 drawn up. And provided this wave 4 correction doesn't come underneath the about 75,400, I usually use lines to draw these. And that line you can see is right here, 75,400, because if I use bars or candles, wicks tend to invalidate Elliott wave a little bit sometimes, so I give a little bit of tolerance to them. But anyways, provided price is able to hold above 75,400, or for a stronger mover, 76,100, because we can still factor in the wick a little bit. Provided price can hold that, I do think we will still get this push up to $80,000 in the coming days. Now, another thing to note is if I use the Elliott wave analysis again, you can clearly see here our wave 3 was shorter than our wave 1, which means wherever the low for this wave 4 comes in, that wave 5 has to be shorter again. So if it was a perfectly balanced move, assuming the low comes in at, let's say, 75,500, a perfectly balanced move would take us up to 80,250, and we know that that wave 5 has to be shorter, so if it were a little bit shorter, it would be 80k, which is pretty much exactly my analysis on the daily time frame. So we've got a lot of confluence for that $80,000 level. And if we jump over to MDX Algo, you can see everyone is still shorting Bitcoin, which makes me think that we'll get that final move up. You can see this long-short ratio. It's biased to the long side, but not by much. One thing that does have me on red alert is the short liquidations are picking up very heavily. We've seen $585 million of short liquidations, and this was coming off the back of many days of fairly decent short liquidations. You can see the $200 million typically marks about a pause. $420 million typically marks a pause or local top, but we've just kept grinding upwards despite all these liquidations. And as Jason always says, when you start to get these excessive bars like this one here, this was what, a $4,000 bar at the end of a move after price has already been trending up for a while, it's typically very suspicious. Now, obviously, that doesn't mean price can't go higher, but it means it won't go much higher. So, as Jason always says, risk versus reward. Do you want to pile in to a long at $76,000, $77,000, $78,000 for a 1 to 2k move up, whilst risking a, you're risking a 2 to 4k move down just to this trendline support? in my opinion, it's not worth it. I wouldn't be loading up on shorts just yet. I would be wanting to wait for some confirmation. So if we can potentially, seeing as 24-hour volume and open interest is picking up, potentially if we see another final massive candle day, so say price grinds down to 75k this week, to about 75.5 this weekend, or 76k, then we see a final squeeze up to maybe 79, 80k, and our short liquidations get closer to that $1 billion mark, then I will definitely be going short if that long short ratio, hits 51.5%, 52% to the long side. I would absolutely be wanting to load up on shorts at that time, and I would be closing out any remaining portion of my long position. Now, to add more fuel to my thesis, you can see funding rate. We're still at minus 0.01%. Typically, funding rates like this are only seen during panic selling events or capitulations. Like, price right now is grinding up, which means everyone thinks it's going to capitulate. So it feels like the short side is really crowded, and what needs to happen is we need to uncrowd that short side before we can start to see price actually move down. Now, one thing that is interesting is you can see most of the liquidity is actually on the underside of the market. So it feels that even though most accounts are short, the real big money is positioned long right now, because they potentially have some insider knowledge, knowing that we'll get one final squeeze. So I'm looking potentially to add this chart into my tool bag to decide when to go max short. Once this chart flips, so once big money, all your whales, insiders, etc., decide to take profit on their longs, that is potentially a sign that the top is in or very, very close to being in. If I come over to the top trader long short, I believe, no, not that page, is it long short ratio? You can see over on CoinGlass, everyone is still voting bullish for the most part, which is very surprising. But I did discuss this with a couple of guys in Discord, saying that people who look at CoinGlass is not your average retail. People who are looking at CoinGlass, or people like you who sit through a 20-minute Bitcoin video every day or every second day, we're not the average retail trader who just randomly buys or randomly loads up on shorts because they're afraid. So I tend to not take this sentiment too seriously. But you can see right here, this is pretty much exactly what I just said in the last few minutes. Your retail and, I guess, whales are bearish, but your smart money / insiders are bullish for the most part. And obviously, on Bybit, it seems the whales are a little bit smarter than the whales on Binance and OKX, because they're suspecting a move up. If we take another peek at, not that one, this one down here, you can see, I don't really know how to read this chart too much, so I'll probably not talk about it too much, but you can see the amount of short accounts has now exceeded the number of long accounts, and coming out of capitulations, typically that means price has higher to go, because you can see through April of 2025, everyone was still short as price grinded higher. And similar, coming out of the Japanese yen carry trade low in 2024, a lot of people were still short as price continued to pump higher. Same here. At the start of 2024, when price was coming out of, I think, the ETF low, everyone was trying to short the pump. So, but on the flip side, you can see after we've seen a very long period of green, and price flips back to red, you can see something like that happened at the in October of last year, when we made our all-time high, it seemed that a lot of people timed the top correctly. Didn't seem like that with the $20 billion of liquidations. So that's sort of what I mean when I say not all market data can be trusted. And if you watch Jason Pizzino's YouTube channel, you'll know that like your Bitcoin top signals, wherever it was, like the rainbow charts, etc., not every piece of market data is actually going to help your trading. And I tend to stick to the ones that work. And that's pretty much what I talk about with you guys. But anyways, thank you all for watching, and I will push out another video whenever something interesting happens. But for now, please like, comment, and subscribe, and hope you guys all have a great weekend. Goodbye.